Happy Easter, everyone. He is risen. Today's theme is fear not. If you have very strong faith, you walk through life with lots of confidence and you don't worry about all the little setbacks that you have. Today, I'm going to be showing you a strategy that's going to allow us to do exactly that during volatile market conditions. But before we do that, I'd like to go over my last couple of trades and then we'll gauge the performance of it. That's the only way that you can have confidence in the system that I teach. And once you have that confidence, you're going to dive in and learn exactly how to do this. HIMS, that was an out of the money naked put sale that we did last Sunday. And here you can see that the stock opened higher on Monday and it gradually pulled back and filled in this gap. This is when I sold the $23 puts, and let me bring up the put options for that, and you'll be able to see I was able to sell them for 50 cents and they're currently trading around 20 cents or so. Those were the April 25 expiration, so they're going to expire this Friday. And you can see that the $23 puts are 19 cents bid, offered at 22 cents. We sold these puts for 50 cents. Now, in that video, I had mentioned selling the $21 puts or perhaps even the $20 puts. You've got to roll with the punches and you have to be able to evaluate what the stock is doing and the risk that you're comfortable taking. I'd mentioned that in the video. You couldn't get those $20 and $21 puts off for 40 cents. And if you've got a few thousand people trying to do this trade after the video, that's going to put downward price pressure on those options and you're not going to be able to get filled. So please learn the lessons. Don't try and use these videos to follow my trades. Learn the lessons that I'm teaching you, because a lot of options, they won't hold thousands of contracts. They won't hold 10,000 contracts. 20,000 contracts with everyone trying to do the same thing. But if you learn the lessons, you're going to find so many opportunities where you can do 50, 100, 200 contracts on your own and you won't be muddling around with thousands of other people. So don't follow, learn the lessons. So HIMS, beautiful trade. We're going to generate somewhere around a 5 or 6% return in just a couple of weeks. And we never had to sweat it because they are so far out of the money. Look, the stock is currently at $27. We're short the $23 puts. The stock in the next week can drop almost 20%, and we're still okay. So I'm going to have a couple of trades like that I'm going to show you because I'm not really expecting the market to move a whole lot this week, and I'll explain why. On Wednesday, we did a live event. And if you've never attended one of our live events, I strongly encourage you to do that because we answer lots of questions. Harry, who runs my chat room, is also part of the live event. And there are so many questions that get answered that I'm sure you have some of those same questions. So please go back and watch that video. I highlighted SBUX, Starbucks, as a short pick, and that was on Wednesday. And you can see how the stock dropped. This is about where the live event was. The stock sold off over $2. It was a great pick. So what do we got the market doing today? What are we going to be looking at for this week? What kind of news do we have coming out? Lots of earnings news coming out. So let's see if we can focus on that first, because earnings reactions are going to be very important this week. So I went into Option Stalker Pro and I marked projected earnings today within the next 5 days. I also want very good option liquidity. So these are the big companies that are going to be announcing this week. And you'll be able to get a feel for which ones might have some market impact. So you've got airlines, you've got some drug companies in here, BMY, ABBV, Dow. Nice mix actually. GE, Google. Google will be a really big influence on the market. IBM, big influence on the market. Intel, semiconductors. So last week we had ASML reported, and they are a semiconductor equipment manufacturer. So that has an even longer term impact on the industry because the chip makers have to buy these steppers. They have to buy this equipment well in advance. They said that they see a lot of semiconductor companies holding off on their purchases until they have more clarity on what the tariffs are actually going to be. TSM also announced earnings last week. They were actually quite good. So actual chip production has proven to be quite strong. So Intel will give us some more insights. Google's making chips. Everybody's starting to make chips. 3M, so you get some of the industrials involved there. Pepsi, Procter & Gamble, so some consumer defensives. As you can see, we get a nice mix of earnings releases this week, and that's going to give us a good sense of where profitability is currently. I think the results are going to be pretty good because the tariffs have not actually been implemented yet, and they haven't impacted profits, and the economy is still pretty darn good in the US. Globally, we're starting to see some weakness. We've been seeing weakness for well over 6 months now. So in general, I think the earnings are going to be pretty good. I think the reactions are going to be muted, mixed. Not going to see a whole lot of movement one way or the other. In terms of what the economic calendar looks like, we don't have a lot of news coming out this week. Durable goods orders, there's quite a bit of Fed speak. But last week, Powell pretty much told us we're happy with current policy. We don't see changing current policy because there's a lot of uncertainty with tariffs. They believe that tariffs are going to be inflationary, so they are not anxious to cut rates. That's very different than what we saw from the ECB. The ECB cut rates by 25 basis points, widely expected move, about 94% probability that they were going to cut rates. They are much more concerned with an economic recession in Europe than they are about inflation, and that's why they've been cutting. And you'll see central banks that initially at the first rate cut or two, everybody's all happy because, oh, we're seeing monetary easing, that's going to be great, that's our safety net. And that excitement wears off pretty quickly. Once you're 2-3 rate cuts down the road, then everybody starts worrying that, uh-oh, what do they see that we don't see? How bad are conditions? My gosh, they're slipping. And all of this easing isn't stimulating growth. Same thing in China. They've been cutting rates for a very long time, pumping liquidity into the system since last September in a very big way, and it's not producing any results. So you would normally think, oh, rate cut, good for the market. Not really. Not when you get to the point to where economic conditions are continuing to slip, even with those rate cuts. We could be going there once we start to see some rate cuts, but the Fed is not there yet, and there's the other side of the coin that you're going to have a lot of economists feeling that they've waited too long, that economic conditions are already showing signs of strain, and the Fed is not being proactive. So what does all this mean as far as the news that's going to be coming out over the course of the next week? There's really not a whole lot. Like I said, we've got some Fed speak, we have durable goods orders. It's the week after, the last week of April. That's when the news is really going to hit because we have Q1 GDP coming out, and this is going to be our first look at it. And the Fed has been projecting minus 2.5% growth, so negative growth, deceleration. That would be the first shot over the bow. That would be a big warning sign that, hey, conditions are really starting to slow down here. We'll also get our first look at PCE deflator, also very important. I suspect that a lot of companies have flooded the U.S. with lots of inventory, and they were trying to front run all of these tariffs that are going to be implemented. So I think that you're not going to see that inflationary impact for a while. It could be another quarter or so, and we still don't even know what those tariffs are going to be. they're still being negotiated, and I also feel that there's a chance that we're going to start hearing about some trade deals. It seems like Japan might be first up to where there could be a deal done there, and perhaps with South Korea. That's going to create a little bit of ease in the marketplace because it will become a known instead of an unknown, and lots of uncertainty. So you can see how the market has been struggling to get back to this SPY 550 level, and I believe that you're going to see some good news come out, be it earnings, be it advancements in trade deals, and the market's going to struggle to get back to that 550 level. And analysts are going to be looking at all the earnings guidance. I think the guidance is going to be light. So again, there's not going to be a lot of concrete evidence for people to sink their teeth into. We're at a juncture right now. I feel like we're in no man's land. I'd love to be able to short here. I would feel comfortable shorting here because after a big sell-off like this and a meager bounce, you would normally expect the next leg down. But I feel that given the news events that are going to be coming out, that we're not going to see that catalyst that we need to really knock the legs out from underneath the market. But as the market starts to test this 550 level very tenuously, and as we start getting through more earnings reports, and as that guidance continues to be more cloudy, and perhaps the trade deals finally start taking some of the pressure off the market, eventually you'll see a struggle to get back here, and then the reality is going to set in. And the reality is that global economic conditions have been decelerating for about a year. It's just been this gradual tick, 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 tick lower, and the tariffs are just pushing us there quicker. So the focus will come off of tariffs, and it'll go back on the fact that global growth is slowing, and that's really the big problem, along with massive debt levels. And we're seeing warning signs too. So this is not just pulling something out of the air. If you look at what currency markets have been doing, they're all over the board. The same thing with bond yields and bond prices on a sovereign level even. They're all over the place. So that is a warning sign that we're not just going to have a nice big massive bounce and challenge the high. In fact, I believe we are going to roll over and have another leg lower this summer, perhaps just a gradual drift lower. Right now, I can't give you any clarity one way or the other, but the strategy that we've been using is to sell out of the money naked puts on stocks that we don't mind owning that have very high option implied volatility, primarily because the market has been selling off. These stocks naturally carry a lot of option implied volatility, but when you add market uncertainty to it, it explodes even more. And so we're able to distance ourselves from the action. We're able to make sure that those options expire before the earnings announcements, and then we just let time premium decay whittle away at them. So it's like throwing hand grenades. You don't have to hit the target, you just have to be in the general area. So let's take a look at what some of those possibilities might be. So you'll see again, these are the companies that are announcing earnings. Tesla's in there, big market mover. You've also got sampling from pretty much every other group and sector. Shorts are going to be relatively passive as well. And why is that? You see this long green candle here? Boy, that put them back on their heels because it was a massive short covering rally that we saw. And with earnings announcements coming, shorts aren't going to be super aggressive. They don't want to take that risk. But as those earnings announcements start to filter through, they'll be more emboldened, and they'll be looking at the numbers very carefully. So not looking for a lot of excitement either way in the market. Let's take a look at the 15-minute chart, and you can see tons of mixed overlapping candles. Pete, where's the market going to go? I don't know. I can't even tell you right now. I mean, I'm seeing nice moves up. I'm seeing nice moves lower. I'm seeing a ton of green and red on the charts. Well, what does that mean? that means that you should be erring on the side of not trading. Conditions are very uncertain right now. Market could go either way. And that's what the red and green candles mean. It means that buyers and sellers are paired off. They're both active and they're pushing the market back and forth, trying to figure out who has the upper hand. It's going to take time for that to play out. Well, that's okay, because we're going to use time to our advantage and we're going to be selling out of the money put premium. So please go back and watch my last few videos, because I've gone over this strategy in great detail. How it works, why we're using this, and you'll be able to see from the trade examples that I give you, there's lots of cushion for us to be wrong. Tick, tick, tick. Let time premium decay eat away at those option premiums. So I could give you a long pick, I could give you a short pick, but in each of those instances, you would have to also take into account exactly what the market is doing. So there'd be all sorts of conditions and constraints. If the SPY rallies above AVWAP-Q and it does this, and the stock is moving above the 100-day moving average and it looks like this, then you should do this, and I'm not going to do that. We're going to keep it really easy here. So we're not going to try and complicate things when we've got basically a tornado of activity happening right now. Fear not. That is the theme. So let's get a search up here and let's see what it yields. I would like to have a stock that's currently on a D1 buy signal. Again, I'm selling naked puts, so I want to make sure that the stock has some underlying strength. I'm going to be looking for a stock that trades between $5 and $50. I want to go with lower price stocks, because then I'm able to take half of the strike price that I sell and hold it in reserve so that I can buy the stock on Reg T. I'd like to make sure that I have high option implied volatilities, 0.4 or higher. That tells me that I'll have that edge that I'm looking for. I'm looking for time premium decay, and I'm also looking for a collapse in option implied volatilities. By the way, if you don't trade options, then you shouldn't be doing much right now. This is really an option strategy that we're using. You don't have a clear sense of where the market's going, so this is a time when you keep your activity to a minimum. You wait for the news to play out, and then you see if there's a breakout one way or the other. Option liquidity, we want that to be high, and we don't want to have any earnings releases that are coming up, because selling options on stocks that are about to announce earnings, those option implied volatilities are going to be high, but they're high for good reason. The stock's going to be announcing earnings. And so you're not going to get the volatility collapse or the time premium decay that we're looking for, and you have to buy those options back before the earnings announcement. So we don't want to have to muddle around with that. We'd like to have at least a couple of weeks where we can sell these options, let them expire before that earnings announcement. So those are the criteria, and you can see that we've got a number of stocks here that came up on this search. Not 50, not 100 that I have to sort through. This is a nice, manageable list. So I'm going to start with one that's a bit more speculative. It's DJT. Truth Social. Yes, this is Donald Trump's company, and to be quite frank with you, half of you love Trump, half of you hate Trump. I don't care. This is like buying Philip Morris. Well, it causes cancer. You can be agnostic to that and just follow the technicals and take the trade. You're not looking for people that have cancer from smoking, and DJT is a reliable resource for people who are trading right now, and I happen to have a feed to it because I want to know what the heck Trump is saying, because it moves the market minute to minute. So for whatever reason, I don't really care. There is a nice support level with a higher low, and this is an upward sloping trend line, and at a time when the market has been selling off, you can see that this stock has actually been finding support, found support way before the market did. So there's support back in March 11th, and you can see how we had a new low April 7th. So there was a nice support level, and we've been able to rally off of it. Now the stock is finding some resistance at the 50-day moving average and at AVWAP-E. I hover over the symbol E here, which tells me when the projected earnings date is, 5/19. What does that mean? That means that I need to make sure that I'm selling options that expire before 5/19. Okay, I'm starting to get my game plan together here. So let's put in DJT. Let's see what kind of option premiums we can get for this. We want to distance ourselves from the action. So we can go out to the May 16th option expiration cycle. I'd rather stay within 2 weeks. We've got a lot of news coming out, and I had already mentioned to you, we've got the FOMC coming up in about 2 weeks, 2.5 weeks. So lots of news. Let's keep it very short term, and let's take advantage of that time premium decay. Where would we want to sell them? Can we get down to $15? Let's hover over. The low there was $15.42. So yes, we'd want to be selling maybe a $16 put that gets us long somewhere around the $15.50 level. Let's see what's there. So $16 put, you're going to be able to get about 30 cents for. And if you take $16 and divide it in half, remember we're putting half up in margin, that's $8. Well, if you sold these for, let's say 40 cents, let's say the stock pulls back a little bit, and you should wait to see what happens Monday. Look at that nice big move that it had on Friday. That is a big move for this stock. Is it going to retrace some of that candle? Yeah, I would bet that it does. And you can see how the stock rallied from $20 to $22. Could it pull back to $21? Yes, it could. Will those option premiums go up if it pulls back to $21? Yes, they will. So hold off and see if you can get 40 cents. Maybe you can get 50 cents for those $16 puts that expire in 2 weeks. If you do this trade, and if you feel confident that you would be a willing buyer of this stock at a net price of $15.60, which is approximately that low right there, in the next 2 weeks, then this is a really good trade for you because it's going to generate a 5% return approximately in 2 weeks. Those type of returns are very, very hard to find, and we're taking advantage of them right now because we have lots of implied volatility in the marketplace. And if we look at VXX, you can see that it has not backed off dramatically. It's staying elevated. Typically, if you get a big spike like this, you're going to see it pull back very quickly. Not right now, because there's a lot of news pending. There's lots of uncertainty. So we're taking advantage of those high option implied volatilities, and we're going way the heck out of the money. During a time of market chaos, we actually have clarity on this position. The stock can go down. Look, it could drop almost $7 and we're still okay. That's almost a 30% drop. When the market made this low, the stock was already rallying off of the low. So if the market sold off 10%, what are the chances that the stock is going to sell off 30%? Not very high, because we're already seeing buyers in there. I like the strategy. I think this is going to be a really good trade. You have to determine what premium you're going to get. You have to determine what strike price you're going to get. You're going to have to watch the stock. So, gee, Pete, you told me that I had to sell the $16 puts for 40 cents and they never got there. No trade. The opportunity is there. Which strike price you use, how far you go out of the money, what premiums you're able to collect for it. I'm giving you a guideline. So you got to use this, okay? So let's take a look at another one. We had another one on this list that I like, and this one may appeal to you even more than the first one. and that is HTZ. So let's take a look at that, and let's see what HTZ looks like. Again, D1 trade signal, low price, high option implied volatility, good option liquidity rating, no earnings in the next couple of weeks. So, Hertz, look at that baby run. We actually got a bullish explosion alert on this Wednesday, and a lot of members in the chat room were on this one. Beautiful trade. The instant I saw it, I went, I know what this play is. This is a play on supply disruption and on car shortages eventually, because we've got all these tariffs coming into play right now. Trump is trying to shift manufacturing to the U.S., and that's going to cause supply chain disruption similar to what we saw during COVID. That's the theory. Bill Ackman, billionaire hedge fund manager, has been taking a position in Hertz on that notion. And you can see how the stock has rallied, and it broke out through this $5 resistance level, and it ran all the way up to $8.24. Am I going to be buying the stock at $8.24? Heck no! I am not going to be buying that stock at that price. I'm not going to be chasing that. Would I be satisfied buying the stock around where Bill Ackman bought it? Yeah, I would do that. All right, well then we have a potential trade. And what we'd be looking to do is to sell the $5 puts. So again, we've got to put up $2.50 in margin so that we can buy the stock on Reg T. And let's put up the option chain. We'll take this down. We'll put the option chain up and see what we could possibly get for those $5 puts. Ideally, we want to stay within a couple of weeks. We don't want to go out too far for the reasons I've mentioned. $5 puts are 25 cents bid, offered at 45 cents. Wow, that's a wide bid-ask spread. Could we get 30 cents for them? Yeah, probably. Could we get 35 cents for them? Maybe. Well, that's what we should be trying to do. But I'll tell you, at the lowest level, 25 cents, which I would not go around banging these things out, because again, this stock has a temporary buyer in it. Could it pull back? Yes, it could pull back, and it probably will pull back, especially if the market has any kind of hiccup. So wait to see exactly how much you can get for those $5 puts, but let's use a worst case scenario of 25 cents. So I'm putting up $2.50, stock at $5. I would make a 10% return on that in 2 weeks. 25 cents divided by $2.50, that's a 10% return in 2 weeks, and the stock can pull back all the way to $5, and I'm still okay. And if I get assigned, I'm not long stock at $5, I'm long it at $4.75. Hey, okay, Bill Ackman's in, I'm in. Well, where did Bill Ackman buy the stock? Well, you can see he's been accumulating in here. How do I know that? Because the guy's doing size. He's not doing 100 shares of a $3 stock. He's buying size. Look at how you've got this volume in here picking up. All right, well, he's long in here. He's probably, his average price is probably going to be somewhere around that 100-day moving average. So he's in at, say, $4.10. Okay, so you would net be in at $4.75 at that worst case scenario. You're in a little bit higher than he is, but not dramatically higher. Are you in twice as high as he is? No. Which, by the way, if you're Bill Ackman, what are you going to be doing? I got a double on my freaking money. I just made 100% because I got a bunch of people chasing into this stock. Do you think that Bill Ackman might be satisfied with a 100% gain that took place over the course of the last month? Yeah, I think he would be. So he's probably going to be selling some of his shares, so you can expect that the stock will gradually pull back. But the option implied volatilities are so high that it's okay. You can still sell those puts as the stock pulls back, knowing that it should find support down here around the $4.50 range. So as long as you're happy and you understand what the risks are of this position, and you're content buying either DJT at a much lower price or Hertz at a much lower price over the course of the next 2 weeks, if you have that mentality, then selling those puts is a no-brainer, because they are going to vaporize. Market's not going to do a whole lot. It's going to be waiting for those earnings announcements. It's going to be waiting for the jobs report. It's going to be waiting for GDP. It's going to be waiting for the FOMC statement. All of these things are going to play out in the next couple of weeks, and I think you're going to see the market chop around. Buyers are going to be engaged and sellers are going to be engaged. Day to day, green bar, red bar, green bar, red bar. Even intraday, you're going to see some choppy price action. So this strategy allows the dust to settle for a couple of weeks, and it allows us to generate some income. That's the play. So I hope this information has been useful to you. Thanks so much for supporting my channel. Please turn on your notifications, subscribe to the channel so that you don't miss any of these videos. Happy Easter, everyone. We will see you Tuesday morning. I will do an update. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.